Scott Bauer of Prosper Trading Academy, CEO over there. Thanks for joining us. And, this VIX and the Vixen, just taking a look at it, stuck in this summer range of lows and then shooting higher. Do you expect that to continue?
Yeah, I don't know that we're going to see, the big spikes like what we saw, end of last week, early this week. But I do think that we are going to stay elevated from where we typically are in summer trade. And we're going to see some chop. And I think one of the big reasons for that is what Romaine was just talking about with rates, right? It's been a long time since we've been in an environment where there's been so much volatility with interest rates, which obviously is flowing over into the equity market as well. And I don't see that going away anytime soon, Abigail. So I think we're going to see this continued chop. I would be skeptical to say that we're going to get these big spikes again. But listen, the way that the market has been trading, seeing VIX over 20 again would not surprise me at all.
Yeah, and it's interesting that you are bringing rates into that conversation because there's definitely reason from the chart standpoint to think that you could see rates back up and then the conversation would go from reflation, it would go from the virus to reflation to possibly inflation, and who knows what that would do to the VIX. So maybe we would see some spikes. Turning to chips, though, this index really levitating toward its near all-time highs, unable to break out. You think that that's about to change, even though we have some weakness and some strength that Romaine was outlining earlier?
Absolutely. And, when you isolate Texas Instruments, they actually had a great report, but their outlook was a little bit iffy. And I think that's where the big, downward 5% move is today. Overall, though, chips to me have weathered all market conditions over the last 6 to 9 months. They've weathered the massive rate rise, the rate increase up to, 1.8% or so, 1.75 on the 10-year, down to where we are now. They've weathered everything. And we're trading near all-time highs, and we've come up to major resistance a bunch of times here, especially if you look at the SOX, the SMH, and I think we're getting primed to break out here. I really am bullish in the sector overall.
And very quickly, before looking at your trade, what's the impetus, what's the driver for that breakout?
Because I don't think that demand is waning anytime soon. I don't think we've hit the top of the market. Yes, there are shortages. We know about the supply chain issues, but I don't see demand dropping at all in the next 3 to 6 months.
So many questions about this second half, even beyond chips in these earnings seasons and earnings profit outlook, what it will look like as the year goes on. Certainly true for chips as well, and especially highlighted as you're mentioning here. With Texas Instruments, very quickly, how do you play this? You're bullish?
Sure. So in the SMH, which is the semi-ETF out there, I'm looking to buy the August expiration, August 20th, 260, 270 call spread. This would be a breakout above that resistance of around 265. I can buy that spread for about $2.70, $2.75. I love the reward to risk on that. And again, this is all a very bullish move to the upside, looking for a breakout.
Scott Bauer of Prosper Trading Academy, thank you for sharing your thoughts with us on rates and the VIX, volatility, and chips.